Good afternoon and welcome to HYCM's online trading workshop.
For both base rate and overnight deposit.
Apologies for that, just turning the squawk off. Welcome to HYCM's online trading workshop. Just going to say hello to folks as you're coming in. If someone could just type a message in the question. Yeah, hi Youssef. Yeah, good to have you. Thanks. I assume I'm coming through loud and clear and that you can all see my screen. That's great. Hi Aaron, Adam, Jayesh, Kenny, good to have you on board, guys. Salvatore, Sammy, hey, welcome back. Selva, Van, Youssef, oh, it's good to have you guys here. For those of you who missed me last week, my apologies. I did give a message on the FX week ahead that I was doing an interview for CNBC, so that's why I wasn't able to be around on Tuesday. And going forward, the second Tuesday of the month, I'm going to be doing an interview with CNBC. So the second Tuesday of the month, the online trading workshop won't be running for that second Tuesday. Everything should carry on as per normal. And just before we get going, I'm away on Christmas for my holiday from the 20th of December and back again for the 6th of January, the Monday. So just to let you know that this will be the last online trading workshop for the next couple of weeks. But then planning to be back as per usual for January 2020, starting on the 6th of January with the week ahead for that week. So that's just by way of explanation of what's going on. Don't forget, during the session we'll be good to look at any trade ideas you've got. So any trade setups you've got or any questions you've got, just pop it in the question panel and I'll go through the questions at the end of the webinar. So we'll have opportunities to look at any trade ideas that you've got. It's a new addition I've been doing for the last sort of few weeks, so I want to keep that up. Don't forget the disclaimers. Again, it's quite key to understand that when we're looking at different currency pairs, different commodities, stops, entries, exits, all of that is from an educational perspective. So what this isn't, it isn't a signal service where I'm telling people where to trade, how to trade, etc., etc. What I'm doing in these webinars is I'm showing you the decision process that I make as I decide my trades, in order that you can watch over my shoulder, learn from me, and in time you learn to make your own decisions. So the reason I say that is because obviously for many of you who've been following my webinars for some time, you know, one tweet from President Trump or one data point or one central bank decision can change the outlook for a currency or a commodity quite rapidly and dramatically. So the idea is I'm equipping you guys to recognize when those changes come, see those opportunities, and respond to them for yourself rather than following what someone else says. So that's just a disclaimer here, and that's basically saying the disclaimer. That's why we have to do these disclaimers, because the market's constantly moving and changing all the time. So the session ahead, we're looking at a special topic, and the special topic we're looking at is what's the outlook for the pound after Brexit happens, okay? So we'll be looking at what the outlook is for the pound after Brexit happens. We've seen the UK election and just want to run over with you guys what the market's focus is going to be now going forward, just so you understand where the pound is and we understand what's regarding on. Yeah. Just had a question in from Sammy. The news squawk that you heard when we were starting literally talks out breaking news. And the question from Sammy is, can more than one person participate in one news squawk subscription? Yes, Sammy, to that question, I think they can, but you have to go onto the RAND Squawk website to see what the details are of that and how that works. I think it may only be for people like who have a floor of traders. So I'm not sure. So I have to check that. But there are discounts available as well. So I know we've got a discount here with HYCM. So before you make any decisions, just ping support a message or ping me a message, Sammy, and we can try and help you out on that. Okay. Any suggestions for any topics, please email me here. Sammy, if you've got any questions about the squawk and you decide to go ahead with the squawk, just email me there, because I know I've got a way of getting a discount for that. So just watch that space, as it were, and email me any questions or any topics that you would like. please send questions to me here, giles.cochran@hycm.com. Always good to hear from you guys. Let me know how you're getting on. I like to hear your progress, and keep in touch. Okay, so don't forget the handout for the session. Now, the handout for the session, if you go to your GoToWebinar control panel, you'll see a little section that says handouts, and on that handout you see a workshop guide, and the workshop guide looks like this. It is, what's the outlook? You look back, look forward, look at the charts, look at your risk, look at the outcome of your trade. I've designed this handout to be a very simple page that you print out, leave by the side of your commuter desk, and by following these 5 major titles, I've decided to create a pattern of trading routine for you to follow. Now, this trading routine is what I do intuitively now. Every single time I come to the market, I'm continually cycling through these 5 points. Okay, so that is what you want to do, and that's what we'll be doing on the workshop. I'm going to be showing you how I do this, and obviously how I decide which currency pair I want to trade. Okay, I'll go through that, and we'll be looking at some commodities as well. We're going to have a quick look at gold as well today. And I'm going to be running through some of the big issues that's going on for gold, because there's potentially a very strong January coming up, and if we get fundamentals and technicals coming together, then we could see a lot of upside in gold possibly. So I want to run that through to you and show you, the kind of risk factors and the things I'm looking for when it comes to gold. So we're looking at the pound, we're looking at the gold, and then we're going to be looking at weak and strong currencies for the Asian session, at the start of the European, and then for the start of the US session. Okay, so in that way, we'll cover the major bases. Okay, so what's the outlook for the pound after Brexit happens? So this is where we are. I started looking at this yesterday on the FX week ahead, and we've got the Conservatives have won a majority. Okay, so the next expected move is PM Johnson is going to bring his WAB, withdrawal agreement bill, to the Commons. Okay, then Article 50 will be triggered on 31st of January. That's Brexit Day, and then there's due to be a year of talks before which the UK will leave the EU on a deal by December 2020. So I'm going to be running through with you. There's been a development that's happened today. I'm going to run through you what's going to be moving the pound now, so we can start to see what the triggers are. Now, we had pound weakness this morning, so let me just show you the pound weakness. Okay, we've had pound weakness this morning, and that pound weakness, you can see it's been reversing the gains of the election. This is pretty much what I was expecting, was a buy the rumor, sell the fact. That was the kind of trade that we're expecting, and many analysts were saying 1.35 was the top area expected, and look, profit's been taken at 1.35, sold off heavily. So that is all as is expected, and today we're seeing some fresh pound selling, and I'm just going to go through the reason for that fresh pound selling rather, and why I'm still bearish on pound for the rest of the US session. Now, PM Johnson announced that he wants to firm up his Brexit legislation by banning a delay to the transition period with the EU beyond December 2020. So you see, one of the theoretical outcomes is that there will be either an extended transition period. Okay, so the deadline is December 2020 to agree on a deal between the EU and the UK, a trade deal, right? So one of the market was thinking that it's very difficult to organize a trading, it's very difficult to organize a trading deal in 1 year. It often takes, 3, 4, 5 years to organize a trade deal between countries. So the idea that UK wanted to do it in a year was always seen as too optimistic. But the market was sort of thinking, well, okay, so there will have to be an extension of the transition period. Okay, so that transition period is the time between Brexit Day on the 31st of January and December 2020. That is called the transition period, and that is due to end December 2020. So what PM Johnson has says today, he wants to ban a delay to that transition period. In other words, he wants to put into the bill that this is not an option. There can't be an extension. So what that means is that there would either be that UK either leaves without a deal and trades under WTO regulations, or there will be a deal. So you see, taking out the option of a transition suddenly makes it much more risky, and it's much more likely that the pound will be pressured now and sold off, because a no-deal Brexit is once again on the table. This was always the risk. Once we get through the Brexit deal being signed, once we get through Article 50 being triggered, then we've still got that possibility of a no trade deal. So that's what the market's reacting to today. Remember, the market's always thinking, what's happening next? Okay, always trying to look forward, look ahead, wants to be one step ahead. Right, so that's where we're at. So negotiating a trade deal is unprecedented, and a deal was an extension to the transition period. The transition period was expected. Right? So reports of PM Johnson's ban on a delay is negative for the pound, as a no-deal Brexit is now more likely. Okay, so that's what we're seeing, this sharp sell-off now. Okay, and I'm just going to show you what we're going to be looking at for the future. So now, this is the sort of things we need to look at. We need to watch the parliamentary vote. We need to watch whether PM Johnson is able to get a ban on the delay of the transition period. If he can't get a ban on the delay, that's be positive for the pound. If he can get a ban to the delay, that's be negative for the pound. If the next trigger point is the Bank of England is meeting on Thursday. So when the Bank of England meets on Thursday, then the markets will be very carefully looking to what they say. Now, remember, a lot of UK data, Bank of England meetings has been pretty much, if not ignored, not given much focus by the market, because Brexit has been the big focus. Now that focus is going to shift a bit, and the Bank of England now is going to be in keen focus. So look at the Bank of England's decision on Thursday. I think it's around 12 o'clock GMT time. Let me just double check that. So Thursday, yeah, 12 o'clock GMT. And I'm going to give you a website to look at the decision that is made. So that website is forexlive.com. As many of you know, I'm an analyst for that group, and we provide excellent breaking news that's only, a few minutes off the Reuters or Bloomberg feed. So we're really very, very quick giving that data out. So I'm expecting the pound to be pressured. I'll talk that through as we go through the webinar, which currency pair I'll want to trade it with, and we'll look at the options that we have going forward. Now, that's the pound. Okay, so I hope that sort of clued you guys into what's going on with the pound. Okay, if you take a little screenshot of this, and it will help you remind you of what's going on. Okay, now let's have a quick look at gold. Okay, now gold, this is what I want to flag up to you. Gold is approaching a very strong time of the month. Can you see? Gold has some strong seasonals, in August. There's a strong physical demand for gold out of Asia, weddings, festivals, and gold tends to be bid in the month of August. And gold also tends to be bid in the month of January. And for the last 1, 2, 3, 4, 5, 6, the last 6 years, So 1, 2, 3, 4, 5, 6. In the last 6 years, gold has gained in the month of January. So what that means is that seasonally, there's strong reasons for gold buying. Now, this is in approach to the Chinese New Year, and that Chinese New Year, part of that tradition is buying gold gifts. So physical demand boosts. Now, we're now in December, and you can see in the last 2 years, gold was bought early ahead of January. Now, that gold being bought in December was due to President Trump really starting in earnest the US-China trade war. That's why gold suddenly took a strong boost then, okay? So, looking at the gold chart, we've seen some seasonal factors here, okay? So that's the seasonal factors. There's strong reasons to buy gold in January. But as many of you guys know, I don't trade simply on technicals. I'm wanting fundamentals and technicals to come together. So as we look at the gold chart, what we can see, just looking at the chart here, we can see that gold has found support around this 1450 level. Okay, we just draw some horizontal support, and we see that's nice strong support at 1450 level. Okay, now heading into year end, what have we seen? Now we've seen some dollar weakness when the FOMC, the Federal Reserve, basically said they want to see a persistent uptick in inflation before they start raising interest rates. So in other words, they gave a very dovish picture. So that's why we saw some US dollar selling after the FOMC Fed's last meeting. So that's one thing that I want to see. A Fed that's on hold is dovish outlook for the US dollar, and that's bullish outlook for gold. So that would be good for gold longs. Okay. However, there's one thing that's not good for gold longs, which is a US-China trade deal that is successful. If that US-China trade deal, now for those of you who've been following it, it's been confusing to say at the least. On Friday, the US and China announced some kind of phase one trade deal that's due to be signed in January. However, on Friday, there was confusion because the details of that trade deal were different, whether the US was saying it or whether China was saying it. So it was confusing. And the best way that I've read to understand it is that the US-China phase one trade deal is kind of a move in the right direction between US and China, and is kind of a step back from making the situation worse, but it isn't a really strong resolution, and there's lots of questions remaining. So in other words, it's still really in the balance whether this trade deal is going to fly or not, and to what extent it's going to help global growth. Now, we had seen some good, strong upticks in the equity markets at the start of the week. The US equity markets hitting record highs. We saw some strong growth in European equity markets yesterday. We're seeing some of that pare back today, okay, and we'll cover that a little bit later. So there's kind of this, wait and see mode. So bearing in mind that we're coming into a strong January, if we get a breakdown in the US-China trade talk, say there's some, situation really deteriorates and President Trump starts making it clear and more analysts are saying this trade deal's no good, etc., then for me, personally, that would be strong reasons for gold longs. I would expect buyers to enter in the gold market, and I would expect stops underneath this 1450 level down here at about 1440. Okay, now that's what I would expect. So you can see we're approaching a key trend line here. If you just look at that trend, that daily trend line, okay, we got one, two touches. So this will be a key trend line. So it's a little bit of a triangle forming here. Okay, so what you want to look for is a fundamental reasons, US-China trade wars, that's a good. President Trump starts tweeting how he's going to, tariff extra tariffs on China, and if things start to break down, then expect this to break out. Now, this is my personal opinion, and it's my personal opinion only, is I'm expecting the US-China trade deal to break down or to be bumpy. Now, my reasons for this is if you look at the way President Trump negotiated with Canada and Mexico. Remember the USMCA trade agreement that replaced NAFTA agreements, okay? So NAFTA was replaced by USMCA, and President Trump, he was negotiating that, and even like sometimes the day before it was going to be signed, President Trump would say something like, I'm going to add extra tariffs on Canada. He was just really, really difficult, is the only word I use to describe, and really antagonistic. And he'd make public statements that were really detrimental to good relationships. So, again, I stress, this is just my own opinion. I'm expecting President Trump to, start talking about tariffs, and there'd be to be some bad news. Now, okay, the argument against that is US equities reached record highs, that it's really good for the US, and that maybe President Trump likes this optimism and wants to keep it going. That may well be the case. So again, it's just my personal opinion. I think it will break down, and gold longs for me make sense with stops underneath the 1440. So that's where I'd expect stops to be. I'm expecting buyers from current levels. I'm expecting buyers from dips, and then I'm expecting folks to try to hold into year end and through January. So, some analysts are saying, I've heard analysts talking about some quite high figures for gold. So I've heard some analysts talking about gold at 1700, and I've been reading some analysts talking about gold back up to 1800. So you can see that there's a bullish potential outlook, but to be clear, to really have the certainty on this trade, to have that deep conviction. Obviously, no trades are 100% certain, so that's why you always have to have proper risk management, because unexpected events can and do occur in the market. However, President Trump saying something very negative very quickly, I would consider adding to my gold longs. Okay, so that's a situation that I'm looking at, and that's what I'm personally looking at trading. Again, I have to stress that is not trading advice. But what I'm, say the US-China trade deal goes really well, and say a phase 2 trade deal is being spoken about as getting done and things progress, then I expect gold to fall down to break through this level, and then I'd be expecting support to be found again at this 1420, 1400 level. So the argument against the upside is improvement in US-China phase 1 trade deal. A break of that level, break of these lows is where I would exit, and then potentially look at re-engaging longs on the 1420 to the 1400 level just prior to January. So that's my outlook on gold. I just share that with you so you can see what I'm doing and the reasoning for what I'm doing. So I hope that is helpful, and don't forget those strong seasonal issues. So I'm hoping the fundamentals, the technicals, the seasonals all come together, and that's what I'm looking at. So don't forget your handout, and what we do in the handout, we always use the handout to look back, identify sentiment, identify key market sentiment. Can you summarize that sentiment in a sentence or two? That's what you always want to do, okay? So we start to look back, and as we're looking back, we want to see which are the strong and which are the weak currencies for the sessions, okay? What are the strong, what are the weak currencies for the session? So we're going to look at this now together, and I'm going to show you the decision that I made for the European session. And my decision for the European session was this: weak pound. Now, I was expecting pound weakness this morning because PM Johnson is wanting to firm up his Brexit legislation by banning a delay to the transition period with the EU beyond December 2020. This was always going to be negative. And then this morning, I was expecting US dollar strength because the dollar index pushed above 97. Let me just show you that. Look at the dollar index. It pushed above the 97 handle this morning. We've been selling off a little bit, but it was stronger this morning, so that's why the call was there. So there was some strong NAHB data, increase in treasury yields. We had that risk on tone from yesterday. So for me, a pound US dollar short made sense. So that's why, looking at the charts, I went to pound US dollar, and I was looking at selling the pound US dollar this morning on pullbacks. Price didn't pull back deep enough to where I wanted it to go, and I wasn't entering at market. So that was my outlook for the pound this morning. We're now going to look at what I'm looking at for this afternoon session. Now, looking at this afternoon session, I'm expecting that sentiment for the pound to carry on through. Okay, it's quite an important issue, and so I do think that that is going to be a reason for pound weakness for the rest of the day, subject to any other unexpected Brexit news. Okay, so that is important. Yeah. Now, the other currency I'm potentially looking at, and I'll just show you my reasoning. Is you can just see some risk off tones coming into the market. Okay, the equity markets, equity investors are very sensitive to risk. So when you start seeing the equity, markets down, you see the FTSE is down, Euro Stocks is down, CAC 40, DAX is down, Spanish IBEX is down. So looking at those European bourses, there's some negative sentiment coming in. We also have negative US Treasury yields, and we have some negative yields on European, German, French, Portuguese, Spanish bonds, and UK 10-year gilts as well. So putting that all together, there's a bit of risk-off sentiment in the market. So I'm expecting the pound to be weak, and then I could expect strong Swiss franc. Okay, Japanese yen, Swiss franc are good risk off currencies to look at, and looking at those is helpful. So now let's look at the chart. So having decided my weak and my strong currency, I now turn to the chart. Okay, and this is what I do each and every day. And I'm looking for key areas of support. So I'm looking at some pivot point, and you can see straight away an S3 pivot point up here. See price moved into this pivot point, a little bit of profit taking. So looking here, where would I be looking at re-entering this market? Well, you can see some of the key places to enter. I'll show you. So any retracements back up to let's have a look at a good way of drawing this. I'll just do a little. So anywhere here and anywhere there. Okay, you see these? So for the next session, if there's a retracement back up to this level and to this level, I would consider pound Swiss franc shorts. So I would expect sellers here, and I would expect sellers there. Now, where would I expect profit taking? I'd expect profit taking exactly where we have profit taking at the moment. So you can see here, let's have a look. I expect profit taking down at these lows. So just exactly where we're seeing profit taking. So if we get a retracement back up to this level, and we get a retracement of that level, potential profit taking I'd expect back down here, just above the 1.2900 level. You can see that's a big round number, 1.2900. So basically expect profit taking from here, about 12910, maybe just a touch higher, just those shoulders there. That's about right. 1.2909, 1.2911 or 12, something like that. I'd expect profit takers just at that level. So this is the place to look for retracements. That is a pivot point. We know there's a pivot point down here, so that's price may well bounce between those two pivot points. But if we get a deep retracement back up to there, so the way to do, the thing to look at is if price retraces, is to look why is price retraced that far, what's driving it, and if there's no driver for it, if the situation is still the same, then potentially a good place to short. You've also got that 1.300, so I would consider that 1.300 level as a good potential place to short as well. That's definitely something to keep an eye on going ahead into the next session. So that's what I'm looking at. That's the currency pair I'm looking at. What trades are you looking at? I'm just going to check the questions now to see if there's any questions, to see if any trades that you guys are looking at. Give you guys a second. And that's really the key thing to keep doing, is to be looking at strong currencies versus weak currencies. And then the other thing to look at is, yeah, pound US dollar. So let's look at the pound US dollar. Sean, are you looking at buying or selling the pound US dollar? What are you looking at? Yeah, okay, Sammy, buying gold retracements. We'll have a look at that in a second. That makes sense. Okay. Okay, so we're going to look at Sean's and then Sammy's. So thanks, Sean. Let's have a look. So pound US dollar. So pounds selling makes sense to me today, Sean, for those reasons I've explained. The only issue with the US dollar is we've got some US dollar data has just come out. We've had some building permits and housing starts numbers have just come out at 1:30. So that's obviously, it's a light calendar today on the calendar. So always look ahead, you see. You always want to see what data have I got coming out. See, okay, it's a light calendar and we've just had building permits just coming out there. Okay, so that's the first thing to be aware of, the data front, but that's past now. Oh, where's my, oh, hang on, where's my, I've suddenly lost my, there we go. I'll go back to trading view. Sorry about that. Lost my chart. Let's get it back. So with this chart, the reason I was a little bit nervous about continued US dollar strength was because of the dollar index. So you see the dollar index, okay, the dollar index is starting to pick up again now. So as the dollar index picks up, that would favor pound US dollar shorts because you've got pound weakness and US dollar strength. So that's just something to keep your eye on. There's a couple of Fed speakers speaking and we've got a little bit of data. So as long as that situation remains, Sean, that makes sense to me. I just favored the Swiss franc as the negative sentiment was coming into the equity market. So if we see more of a risk-off move develop, then pound Swiss franc for me will be the better way of selling the pound. However, at the moment, pound US dollar makes quite a lot of sense to me, Sean, I don't see any problem with that. And the places to look at pound US dollar joining that sell, obviously you could expect some sellers from here and back up here. So any retracement back up to these levels would make sense to me for pound sellers. So that's what I'd be looking at. Pound yen, yeah, Salvatore, just what we're doing, looking at the pound. Pound yen makes sense for the very similar reason that pound Swiss franc makes sense. So pound yen selling makes sense from this level and that level and this level. So there's three levels that I can see here. This near-term resistance, and then I would imagine stops running above these 14725 highs. Sammy, looking at gold on pullbacks. That makes sense to me. So you can see prices just pulling back now towards that pivot point. So on the gold chart here, let's just get rid of that pivot point. So on the gold chart here, I'll be expecting buyers here and buyers down here. And then if you get any further than that, I'd expect buyers down here. So let's just have a look at some key. Yeah, so that's another key level here, 1474. So 1474, I like that for buyers, and 1460. So these two levels for medium-term gold buyers, I like those, Sammy. They look like good levels. And obviously there's this level here, 1467, just above here. So there's 1, 2, 3 levels with, for me, stops make sense on here, underneath 1440, which you can see is also underneath the S2 pivot point. So that makes sense to me, Sammy. And the obvious thing to look for is risk tone and how is the US-China trade negotiation going on. And we've got that descending trend line from the highs here. Let's make that a bit better. So, you know, that's going to be key, going a break and close. Technically, what we need to see technically, and this is a good little tip, is if you see, you could wait for a break of that level. So if you get a break and a daily close above that level, that's a really good indication that higher prices are ahead. You know, just looking at the price action, you see the price is building up towards that level, and I'm expecting some kind of, even an attempt at a break. But to look back and to see whether the break is valid, one of the easy ways to that is to look for, on the daily chart, look for a break and a close. So a close means that the candlestick closes outside of that trend line. So if you get a break and a close, then that gives the breakout a little bit more technical confirmation. So here's an example here recently, the 1450 level. You can see there's a break and it closed above the level. Okay, it's always a good indication. So that's what you need to look at here. If that bullish case carries on, it's there. If price retraces back down through 1440, I expect the next place of support is to be around that 1400, 1420 zone there. Just see if there's any pivot points down there. Yeah, so that, you know, yeah, 1435, and that's 1400 level there. That would be good pivot points as well. That would make sense. Yeah, okay, let's look at Salvatore, US dollar, Swiss franc. Okay, so we're seeing some Swiss franc strength on this risk off tone. So if we see, like for me, let's see, Salvatore, I'm assuming you're selling US dollar, Swiss franc. See, what I'd like to see here is just a little bit more confirmation that the risk off tone is here, because at the moment it's kind of neutrally. And there's nothing strong enough in the US dollar for me to say, yeah, I'm expecting that to be sold. So when we're looking at the pound Swiss franc, there is strong enough reasons for me to think, yeah, I'm expecting the pound to be sold. And, you know, the Swiss franc, there are minor risk off tones at the moment. The US dollar Swiss franc pair, yes, it could go down, but I can't see a strong catalyst for US dollar weakness. Okay, so I don't see that in the market at the moment. So that's why, for me, this range could easily be, you know, popped back through and we could go back up. So I haven't got any strong fundamental reasons for US dollar weakness. So I'll be cautious here. However, having said that, I think it's a great pair. And if we do get onto a risk off tone, then I would expect more US dollar Swiss franc weakness. And say there's a, you know, strong reason for that risk off tone to carry on, then there's some downside. We have a pivot point just nearby, a 0.788 region would make a good potential first target, but you'd want to look at a, you know, a fundamental reason for that. And if we got a fundamental reason and price breaks through, then look for a retrace back up to that 0.9810 level with all that recent resistances. So if you know, President Trump makes a tweet, going to put tariffs on or something like that, we have a big risk off tone, then, you know, return up to that level. But then if we did get President Trump doing a tweet that was detrimental, then I would favor the Australian dollar Japanese yen short. That would make more sense to me. Okay, so we are seeing some, look, we're seeing some yen strength come in to the market here against the Australian dollar Japanese yen pair. So that's just something to be aware of on those crosses. Okay, guys, very good. Okay, that's all the questions that we have for today. I want to wish you all a very, very good Christmas, and I hope you have a good holiday and a good break. It's been an absolute pleasure taking these workshops over the year, and I particularly hope this has been helpful for you, and I hope you're a very happy new year, particularly to those of you guys who I've met when I run the Dubai events, so Sammy and others, and really hope you have a really good new year, and thank you too for attending so regularly. Aaron, Van, Salvatore, Selva, it's really great to have you on board. And if you've just joined today, and Hashik as well, good to have you on board. And I hope that you've enjoyed this webinar. And I look forward, plan to, God willing, see you all in the new year. Take care, and I look forward to seeing you then. Goodbye.